Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is October 24 and we're starting from euro-dollar pair with Tin Lao. The US dollar rapidly started losing ground as soon as the US trading session opened, even in the absence of economic reports and news flow. It is unclear what caused such a massive sell-off. One might attempt to link it to calls in the Arab world to impose an embargo on oil supplies to Israel. But the issue is that oil prices also dropped yesterday. It appears to be a significant speculative attack. However, the problem with such theories is that there is never any concrete evidence to support them, and such an explanation seems quite stretched. So we just have to acknowledge the dollar's broad weakness. The only good thing is that this only happens in the absence of news and economic reports. Fortunately, we have a good amount of releases today. Preliminary Business Activity Index estimates are being published across the board. In Europe, all the PMIs are expected to rise without exception, while in the United States, they are projected to decrease. So logically speaking, the US dollar will continue to lose ground. The EURUSD started the new trading week significantly higher, with it surpassing the resistance area of 1.0600, 1.0630. As a result, the euro's exchange rate increased by approximately 0.8%. On the 4-hour chart, the RSI is showing movement in the overbought zone. This technical signal suggests an excessive amount of long positions on the euro. On the same time frame, the alligator's MAs are headed upwards, which corresponds to the price direction. The euro is already overbought in the intraday period. However, in case it proceeds with the current momentum, speculators after the correction may choose to ignore this technical signal. In this scenario, the pullback may be delayed, and the currency rate could continue to rise. In terms of complex indicator analysis, we see that in the short term and intraday periods, the indicators are reflecting an upward cycle. Let's trade with MACD indicator. It's GBP USD, presented by Jakub Novak. Long positions buy pound when the quote hits 1.2277 and take profit at the price of 1.2310. Growth may occur in continuation of an upward trend, but this will be possible only after strong data from the UK. When buying, make sure that the MACD line lies above zero or just starts to rise from it. Pound could also be bought after 2 consecutive price tests of 1.2247, but the MACD line should be in an oversold area, as only by that will the market reverse to 1.2277 and 1.2310. For short positions, sell pound when the quote hits 1.2247 and take profit at the price of 1.2219. Pressure may increase after weak statistics from the UK. When selling, ensure that the MACD line lies below zero or drops down from it. Pound can also be sold after 2 consecutive price tests of 1.2277, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.2247 and 1.2219. What about cross-currency pairs? Here it is CAD-JPY currency pair. Area of Mockmore describes. On the 4-hour chart of CAD-JPY commodity currency pairs, there seems the deviation between its price movement with stochastic oscillator indicator, so that in the near future CAD-JPY has the potential to weaken, where if it is managed under the level of 109.01, then CAD-JPY has the potential to continue its weakness up to the level of 108.55. If the momentum and volatility quite supporting, then it's not possible to these currency pairs to continue its weakness up to the level of 108.08. But if on the way to those levels suddenly there is the reversal of direction, where CAD-JPY suddenly strengthens and target breaks above the levels of 109.94, then all the weakness scenario that has been described before will become invalid and automatically cancel itself. And finally, here's Laurie Bailey with AUD-USD currency pair forecast. Let's have a look. On Monday, the Australian dollar tested the support level at 0.6295 once again. And after bouncing off it, confidently moved towards the target level at 0.6388. US stock markets closed mixed yesterday, showing signs of a reversal into an upward correction. The Australian dollar, as a risk currency, is ready to catch these growth. If the price can overcome the resistance at the MACD line 0.6430, it will rally towards the target level of 0.6514. The succeeding situation will depend on the US dollar situation. On the 4-hour chart, the price has risen above the MACD line, although it has yet to consolidate. However, consolidating above the balance line, it's a red line on graphic, suggests an impending success in maintaining its upward positions. The Marlin oscillator has settled in positive territory, reinforcing the uptrend. That's all for today. See you soon and good luck.